Hey, warriors, what's up? It's your favorite ever enthusiastic crypto guide, Loki Bunny, bursting at the seams but exciting to dive into another day of DeFi madness and crypto crunching. We've got a fantastic lineup for you today's show. All the hot takes, bold predictions, and smart strategies, and you've come to expect from this rabbit hole of a crypto. So, if you're new here, don't forget to smash that subscribe button and join the Warrior Clan, the most fearless tribe in the crypto space. Now, let's hop into it and see what's buzzing in the world of crypto and DeFi.
Embarking on the journey of exploring WeFunder, we are welcomed by numerous benefits this platform holds. Compared to many other crowdfunding platforms, WeFunder has an edge with its lower investment minimums, making it more accessible to a wider range of investors, not limited to just one segment. It opens up a diverse range of investment opportunities, allowing investors to place their money in sectors that truly speak to them. As the largest regulation crowdfunding portal, WeFunder presents a thriving marketplace for passionate investors to connect with budding companies they can truly believe in, further establishing the platform as an ideal intersection between creative ideas and capital. However, as with any investment platform, WeFunder carries its own set of risks and drawbacks. Venturing into early-stage startups is not without its challenges. There's substantial risk involved, and the potential for not receiving returns on investments is quite real. In this high-stakes world of startup investments, uncertainty and volatility come as part and parcel of the journey. This is why, as investors, it's imperative to conduct thorough research and exercise caution when making investment decisions. What's the success rate, you ask? Well, let's just say WeFunder has had quite a few triumphant moments. It showcases a high success rate for crowdfunding campaigns, which is largely due to the mix of high-quality investments and a wide range of potential investors. Take, for instance, Everpedia, which successfully raised $149K through a campaign on WeFunder, clearly highlighting the platform's potential for driving startup success. In comparison with other crowdfunding platforms, WeFunder continues to maintain its distinctive position. Its lower investment minimums and large network of investors set it apart from its competitors like Seed, Invest, and Republic. The year 2022 served as a testament to this, with WeFunder being recognized as one of the top platforms for equity crowdfunding. But how about the costs? WeFunder charges a 7.5% flat fee on total funds raised, a figure quite comparable to other Reg A+ platforms. However, when stacked against Reg CF platforms, WeFunder's fees could be considered higher. It's vital for investors to account for these associated fees when evaluating potential investments. Navigating through the regulatory and legal landscape, WeFunder operates under stringent regulations such as Regulation Crowdfunding and Regulation D, Rule 506. These regulations have been instrumental in enabling non-accredited investors to participate in crowdfunding, thereby democratizing the investment landscape. For startups listed on WeFunder, adhering to financial reporting requirements and disclosing potential risks remains a critical mandate. Now, if you're wondering about the due diligence process that WeFunder employs, rest assured it is quite thorough. This process incorporates both compliance and evaluation. Compliance checks involve verifying regulatory requirements, financial statements, and risk disclosures. The evaluation aspect assesses the startup's team, market, product, and financials, with a particular focus on traction, scalability, and a unique value proposition. WeFunder further strengthens this process by utilizing its lead investor program, ensuring that experienced investors lead the due diligence and negotiate terms with startups. In conclusion, our research on WeFunder paints a picture of a platform that bridges the gap between investors and the exciting world of startups. While its user-friendly interface, diverse investment opportunities, and lower investment minimums are certainly impressive, it's important to remember that investing in early-stage startups does come with substantial risk. WeFunder has indeed made a mark in opening up the startup ecosystem to non-accredited investors. But like all investments, the key is to balance potential rewards with inherent risks. Always remember, knowledge is power, especially in the world of investing. Immersing ourselves into the depths of the WeFunder platform, we discover an intriguing and beneficial tool for investing. It proudly stands apart from its competitors, presenting lower investment minimums that are accessible to a vast range of investors. The platform does not restrict itself to a specific industry, but presents a cornucopia of investment opportunities, allowing potential investors to channel their funds into areas that resonate with their interests and values. WeFunder has achieved its esteemed position as the largest regulation crowdfunding portal by curating a dynamic marketplace, which forms a symbiotic relationship between passionate investors and fledgling companies. It has successfully crafted an environment conducive to the exchange of fresh ideas and capital. In the volatile world of investment, however, challenges and risks are inevitable. Investing in nascent startups comes with a significant risk factor. It carries the potential for not receiving returns on the investment made. The landscape of startup investments is rife with uncertainties and instability. Therefore, it becomes essential for potential investors to meticulously scrutinize and exercise prudence before venturing into any investment decisions. The track record of WeFunder's success rate is noteworthy. It boasts of an impressive success rate for its crowdfunding campaigns. This success can be attributed to the synergistic blend of high-quality investment opportunities and the broad spectrum of potential investors on the platform. A shining beacon of WeFunder's success is the example of Everpedia. They executed a triumphant campaign on WeFunder and managed to raise a remarkable $149K, illustrating the tremendous potential the platform possesses in steering startups towards success. WeFunder maintains its distinctive stance when compared with other crowdfunding platforms. Its lower investment minimums and substantial investor network are significant factors that distinguish it from its competitors, such as Seed Invest and Republic. This unique positioning of WeFunder was reaffirmed in the year 2022, when it was acknowledged as one of the top platforms for equity crowdfunding. Navigating the financial aspect of the platform, WeFunder applies a 7.5% flat fee on the total funds raised, and this fee aligns with the rates offered by other Reg A Plus platforms. However, in comparison to Reg CF platforms, the fees imposed by WeFunder might be perceived as higher. Hence, it is crucial for potential investors to consider these fees while assessing their prospective investments. In terms of regulatory and legal requirements, WeFunder operates under the stringent guidelines of Regulation Crowdfunding and Regulation D Rule 506. These regulations have paved the way for non-accredited investors to participate in crowdfunding, thereby broadening the horizons of investment opportunities. Moreover, for startups listed on WeFunder, compliance with financial reporting requirements and a clear disclosure of potential risks form the core criteria. The due diligence process employed by WeFunder is robust and comprehensive. It comprises a compliance and evaluation stage. The compliance checks revolve around validating regulatory requirements, financial statements, and risk disclosures. The evaluation process scrutinizes the startup's team, market, product, and financials, laying special emphasis on traction, scalability, and a unique value proposition. WeFunder further fortifies its due diligence process with the integration of the lead investor program, which ensures that seasoned investors steer the due diligence proceedings and negotiate the terms with the startups. Concluding our comprehensive investigation into WeFunder, we find an effective platform that facilitates the convergence of investors and the thrilling world of startups. Its user-friendly interface, diverse investment opportunities, and lower investment minimums significantly contribute to its appeal. However, it's crucial to bear in mind the inherent risks associated with investing in early-stage startups. While WeFunder has made significant strides in democratizing the startup ecosystem for non-accredited investors, it is essential to strike a balance between potential rewards and inherent risks. Remember, in the realm of investment, knowledge is power, and thus diligence, caution, and a keen understanding of the intricacies involved are indispensable. From an investment platform's perspective, WeFunder has admirably done justice to the spirit of equity crowdfunding by creating a vibrant, diverse, and accessible marketplace for startups and investors alike. However, the responsibility of due diligence, understanding the dynamics of startup investments, and awareness of the inherent risks remains in the hands of investors. Considering the inherent uncertainty and volatility associated with startups, prospective investors must perform a comprehensive analysis of the company they are considering to invest in. It involves not just understanding the product or services of the startup, but also evaluating its business model, market potential, competitive landscape, and the credibility of the founding team. A meticulous approach like this minimizes risks and maximizes potential gains. Equity crowdfunding, although laden with risks, is an exciting frontier of investment that presents the opportunity to be part of a company's journey right from its early stages. The success stories that have emerged from platforms like WeFunder are a testament to the potential rewards that can come from carefully chosen, diligently researched investments. For instance, Everipedia's successful campaign, which managed to raise $149K, underscores the fact that startups can indeed make a significant mark and provide handsome returns to their investors. From a comparative perspective, WeFunder holds its own in the fiercely competitive space of equity crowdfunding. With its lower investment minimums, it provides an entry point to a broader range of investors compared to platforms like Seed Invest and Republic. This characteristic, coupled with a vast network of investors, makes it a platform of choice for many startups seeking funds and investors looking to tap into the potential of early-stage companies. Recognitions like being named one of the top platforms for equity crowdfunding in the 2022 year in review further validates WeFunder's solid standing in the industry. As with any investment platform, costs associated with WeFunder play a crucial role in investment decisions. The platform charges a 7.5% flat fee on total funds raised. While this is in line with other Reg CA Plus platforms, it might be higher compared to Reg CF platforms. It's essential for investors to factor in these costs when calculating potential returns on their investments. In the often complex world of equity crowdfunding, regulatory and legal requirements play a pivotal role in ensuring fair practices and investor protection. WeFunder operates within the framework of regulations such as Regulation Crowdfunding and Regulation D Rule 506, enabling non-accredited investors to participate in crowdfunding. It's imperative for startups listed on WeFunder to adhere to financial reporting requirements and to disclose potential risks transparently, thus fostering an environment of trust and informed decision-making on the platform. WeFunder's due diligence process, consisting of compliance and evaluation stages, is designed to protect the interests of its investors. By checking regulatory requirements, financial statements, and risk disclosures, WeFunder ensures that the startups listed on its platform meet the necessary legal and financial standards. The evaluation process, focusing on the startup's team, market, product, and financials, aids in identifying startups that have a solid foundation and high growth potential. WeFunder's lead investor program adds another layer of scrutiny, involving experienced investors in due diligence and negotiation processes, thus maximizing the chances of a successful investment. To wrap up, our in-depth analysis of WeFunder illuminates a platform that offers a user-friendly interface, a broad spectrum of investment opportunities, and a relatively lower entry point for investors. While the prospect of investing in early-stage startups carries substantial risks when approached with caution and thorough research, it also presents an opportunity to be part of a company's growth story and to reap the potential benefits that come with it. The onus remains on the investor to strike a balance between the excitement of potential high rewards and the sobering reality of inherent risks in the startup world. WeFunder, through its platform, gives the opportunity to both accredited and non-accredited investors to become part of this exhilarating world of early-stage investments. Still, it is fundamentally up to the investors to navigate this complex landscape with caution, diligence, and sound judgment. The platform's distinguishing feature, its lower minimum investment threshold, not only democratizes the investment process, but also allows a wider range of people to contribute to the success of innovative ideas and startups they believe in. This characteristic, paired with its extensive network of investors, empowers WeFunder to facilitate a dynamic and diverse marketplace, bridging the gap between ambitious startups in need of funding and enthusiastic investors in search of potential high-growth opportunities. However, the landscape of startup investment is fraught with uncertainties and fluctuations. Despite WeFunder's efforts to provide a trustworthy and reliable platform, investors must remain acutely aware of the potential risks. It is always prudent to conduct a thorough and objective assessment of a startup before making an investment. Careful consideration of factors such as the startup's business model, market size, competitive landscape, and team expertise can help minimize risks and ensure a more informed decision-making process. While challenges are inherent in the world of early-stage investing, the potential for significant returns cannot be overlooked. WeFunder's notable success stories serve as proof of the platform's potential. The exemplary campaign of Everpedia, which successfully raised $149K, stands as a testament to the possibilities that can unfold for well-managed and innovative startups on WeFunder. Such case studies demonstrate the potential of WeFunder as a conduit for success in the dynamic startup ecosystem. In comparison to its competitors, WeFunder differentiates itself through its user-friendly interface, diverse investment opportunities, and larger investor network. Its recognition as one of the top platforms for equity crowdfunding in 2022 attests to its successful efforts in the space, further enhancing its appeal to both startups seeking funding and investors exploring early-stage investment opportunities. A significant aspect to consider when investing through WeFunder is the associated fees. WeFunder imposes a 7.5% fee on the total funds raised, comparable to other Reg A+ platforms, but potentially higher than some Reg CF platforms. Understanding these costs is crucial for investors as it directly impacts the net returns from their investments. WeFunder operates under the guidance of regulations such as Regulation Crowdfunding and Regulation D Rule 506. These regulations have widened the access to crowdfunding for non-accredited investors, contributing to a more inclusive investment landscape. Startups listed on WeFunder are required to comply with financial reporting requirements and transparently disclose potential risks, fostering trust and ensuring that investors make informed decisions. The platform employs a comprehensive due diligence process encompassing compliance and evaluation stages. This process, focusing on regulatory requirements, financial statements, risk disclosures, the startup's team, market product, and financials, aims to ensure that startups listed on WeFunder are well vetted and meet high standards. WeFunder's lead investor program provides an added layer of scrutiny involving experienced investors in leading due diligence and negotiating terms with startups. In conclusion, while WeFunder presents a diverse range of promising investment opportunities and a user-friendly interface, the inherent risks associated with early-stage startup investments should not be overlooked. As potential investors navigate this landscape, they should be armed with due diligence, thorough research, and a keen understanding of the risks involved. WeFunder, through its platform, has successfully democratized access to the exciting world of startup investment. However, as always in the realm of investment, understanding the balance between risk and potential rewards is crucial.
And that, my fearless warriors, wraps up another roller coaster ride in the fast-paced world of crypto and DeFi. We've analyzed strategies and even hypnotized and all the same of the name, helping you navigate this exciting universe. Remember, stay sharp, stay vigilant, and always question the status quo. That's what being a warrior is all about. If you enjoyed this crypto journey, don't forget to hit the like button, share this video with fellow friends and warriors, and most importantly, subscribe to the channel to keep the crypto energy flowing. This is Low Key Bunny signing off for now, but I'll be back soon with more exciting crypto insight news. Stay tuned, stay strong, keep warring warriors. Until next time, I'll see you on the other side. Have a wonderful, blessed day. I'm Low Key Bunny signing out. Bye-bye.